long. Instead, let's discuss the rate rise that's going on, just as exciting, because it's Options Insight. 45 minutes to that closing bell. We have to get you up to speed with the day's options trading. Joining me now to look at that drop and then, well, of course, then the rise today in yields, Alan Neckman of St. Paul Research. And Alan, you know, it's not nice when the first thing of your talking point says that it is a rate rise nonsense. What do you mean by the nonsense?
Well, I think it was somewhat obvious when everybody was on one side of the trade that things don't usually end well. And everybody had pretty much chosen the idea that rates were going to rise and get to 2%. But the market was saying otherwise. If you look at the Eurodollar futures, they have not been saying that. And they're still saying that we're going to have one hike in 2023 and two in 2024. And even with those three hikes, the yield will still be at 1%. So rates are extremely, extremely low, but for whatever reason, the market and a lot of pundits and economists have been afraid of rates rising very fast, but the markets were saying another thing.
Well, the markets might be looking at the lead in China, which has signaled this morning by that extra sort of reserve cut that they're trying to combat what they think is a slowing economy. What did that mean for Chinese equities, and how are you looking at that?
Well, I'm looking at Chinese equities as an opportunity because what we see a lot of in the last years, and again, we're in a bull market for the last decade, and I don't think anything's changed. We're seeing rotation from good to bad, and then when bad turns good, you go back into bad. So stocks that have not rallied recently, so this is a good example. This stock is down 50% from its meme high back here in March, and is down 25% of the year. I'm looking for China stocks to come back. They're essentially unchanged. If you look at the FXI, which is the ETF for China, is essentially unchanged over the last year. So I'm looking for a snap back as people look for new opportunities in markets that get too hot. They look to move their money.
Talk to us then. One of those stocks that we've been following all week, Tencent. What's your trade?
Yep. So the trade here is Tencent is got bullish divergence. It made new lows, but not new highs in volatility. So a lot of times, what that means, you can see a short squeeze, as we've seen. That's been the story of this year for some stocks. I'm looking at a January option, plenty of time, 6 months of time in TME. The January 12 call is trading for about, the break even on this particular in-the-money option strategy is a dollar or so higher, a dollar and a quarter higher. He's got plenty of time for this stock to snap back and get back inside that channel between 14 and 16, which targets a near-term move back to 18.
Alan Neckman, thank you as always for joining us for Options Insight today. Really appreciate it. And Carolina, I hear that there is a diamond so gorgeous we must revisit.